Tonight's first order of business, falling oil prices and rising expectations of trade tensions. The Mideast oil cartel OPEC has long managed global supply with an eye on prices, usually to keep oil prices up. Now it seems to be doing the opposite. But the bottom line is Western Canadian oil is still trading at a discount. And ironically, the plunge in global prices has narrowed that discount. So if we aren't actually better off, we're at least less worse off than we were. Welcome to The Exchange. Crude oil prices have fallen to their lowest level in 3 years, closing today at about $77 a barrel. So what sparked the decline today? You can look to Saudi Arabia for that. It cut prices for crude exports to the U.S. customers. There's some concern that geopolitics are at play. Some think Saudi Arabia is driving down prices to target Russia. Others suggest Saudi is willing to weather lower prices for a while in order to put the squeeze on U.S. shale players. U.S. crude production is now at the highest level in 30 years, and America's shale boom is moving the country closer, of course, to energy independence, a major political priority. According to some estimates, U.S. oil from fracking costs about $62 a barrel. From Canada's oil sands, that's about $74. Production is much cheaper in the Middle East at an average of $30 a barrel. So if oil prices do fall much further, North American projects could become unprofitable. Oil producers may have to scale back. Now, there is that small silver lining for Canadian companies. Oil sands firms have long complained about the discount price on Canadian crude, and that has narrowed from nearly $40 a barrel a year ago to just $15 a barrel today. And we remember that's U.S. dollars. So as the loonie has weakened, hitting a 5-year low today, Canadian producers benefit from the exchange rate. For now, the big question is, how low can oil prices go? Traders will look towards OPEC's meeting at the end of the month to see if the group will cut production, and any moves the cartel makes or doesn't make could have some serious ripple effects. Jamie Webster is Senior Director of Global Oil Markets at IHS. Great to have you with us.
Thanks for having me, Amanda.
So I want to start with the reasons behind what Saudi Arabia is doing. Do you have a view? There is this kind of whole theory that it is targeting Russia and trying to kind of contain its expansionist feelings, or it may be, as we did see some senior OPEC members say last week, targeting shale producers. What's your view?
I think it's actually none of that. I think those sorts of theories actually give a lot of put a lot of weight behind Saudi Arabia having a lot more strategy to this than it actually probably does. I think the price changes that you've seen are in normal accordance with looking at how the market is developing. U.S. imports of Saudi crude have actually fallen in the last couple of months, and that's largely because just a few months ago, Saudi Arabia was actually increasing the prices to the U.S. quite a bit as they were actually seeing reduced revenues out of the United States relative to what they were getting in Asia.
We have, though, in the past seen OPEC willing to reduce its output in order to put a floor under the price of oil. What's different this time? Why do they keep pumping oil even though it is sending the price down?
I think right now we're at what I would call a pivotal moment for the oil markets. You are right that generally OPEC, kind of acts as the market balancer and is willing to cut production, OPEC largely being Saudi Arabia. Saudi Arabia still makes these sort of seasonal sort of adjustments, but I think there's a recognition now that we're on a substantive change here. Partly that was driven by Libya production, which has suddenly come forward, but it's also because Saudi Arabia and the rest of OPEC also sees what's going on in U.S. shale, which is really more than enough production to handle all of global demand. And so they're really kind of, I would say, grasping for trying to figure out how they want to proceed in this sort of new dynamic.
So the old dynamic was that a lot of the power did reside in the Middle East, and that shaped a whole lot of things, including obviously foreign policy for places like America and even Canada. What changes now that we have this prospect of an energy independent America?
One, I think it's going to be a number of years before you see quote unquote energy independence. But I think what you're going to find is that the original hope of President Nixon of America becoming energy independent, we're going to start to realize this probably wasn't the goal we actually wanted. The goal is actually we want stable, reasonably priced oil. Just because we don't take oil from the Middle East doesn't mean we're not connected to global prices. And so they're still going to matter even if you don't take any of their oil. So I think there's going to be a change in policymakers' mindset over the next couple of years.
Yeah, so from that point of view, we've seen that one of the things that's happened in continental North America is that energy costs have gone down because of shale gas in large part. You could see from a policy point of view that that's very good. We're seeing manufacturing coming back to North America. We're seeing businesses profit aided by that. What's the saw-off, in your view, for the U.S. government of wanting to produce energy and maybe even begin exporting energy again and having that low cost effect for business?
I think a lot of this production has really taken U.S. policymakers by surprise. This production growth was done by private industry. Now there's actually a great deal of discussion talking about if the U.S. should actually allow the exportation of crude oil. This lower price actually puts more pressure on producers, and with it, many Americans are not necessarily happy with giving aid to oil producers. But realize that many of these producers hire a great deal of Americans and Canadians that have been taking on these jobs since the recession. So allowing crude oil exports, which is quite a change in policy over the next couple of years, I think would really allow some of our production to continue this sort of growth. This price decline does present some challenges, but I think many people are going to be surprised by how resilient U.S. production can end up being, even at these prices.
And just explain for us why there has ever been a ban on the U.S. export of oil. Why did they have that policy in place?
Sure. So this was put in place probably 40 years ago, and it was largely in response to the Arab oil embargo at that time, and was really something to help support what was at that time actually programmatic or kind of controlled prices within the United States. If you allowed the export of crude, it would have really undercut that whole system. President Reagan then ended up allowing petroleum product, gasoline, diesel exports to proceed in the early 80s. But crude was never talked about, mostly because there was never even hope, even if you had had a policy change, that you wouldn't have seen any exports anyway until probably the fourth quarter of last year.
So just for the countries like Canada, but it's also true of the U.S. and elsewhere, there is this kind of balancing act between, the reality that commodity prices do fall. They don't always stay at high levels. And that can be painful for producers and governments that rely on the revenue, but good for other parts of the economy. Is there a sweet spot? Is there a price of oil where you would say that's good for global growth?
I would say that when it comes to total global economic growth, a lot of times the lower price is more useful, but you have to look at what is a sustainable price. I often say that producers want the highest price they can get, consumers want the lowest price they can get. Both agree they would actually like a stable price, which helps with figuring out what your budgets are going to be. I would say that this lower price does end up essentially providing a stimulus for consumers in terms of gasoline prices and businesses that are looking to use this oil. But it does provide a bit of a problem for OPEC producers, which of course need this a bit more. I think many people think that Saudi Arabia is in a really bad bind. Surprisingly enough, they're actually one country that can actually weather much lower prices without a whole bunch of trouble.
All right, we got to leave it there, Jamie. We appreciate your time today.
Thank you.